I'm seeing Disney get a lot of negativity online as a stock, with many people thinking it's time to sell or bet against the mighty mouse. Meanwhile, I've bought it, and to me it was an easy purchase. Why? First things first, Disney is not all theme parks nowadays. A huge portion of their business comes from the media network, studio entertainment, and direct-to-consumer products. And I won't bore you with the numbers, but take a quick look at the 2019 revenue breakdown. It's a well-diversified company. Now I get that many of the areas of diversification will be impacted, such as cinemas, toy sales, cruise ships, and the resorts, but the closures are temporary, and they have the ace up their sleeve. The ace is Disney Plus. Disney Plus is going to absolutely rocket in this quarantine. Millions of families around the world are going to be struggling to entertain their kids, and now they're offered every Disney classic for less than a Netflix subscription. It's a no-brainer. We're going to see massive numbers of new sign-ups. Personally, I've seen this with people I know. I told my girlfriend about Disney Plus and she loves it. The first thing she did is tell her sister about it, who's now also got it. And I bet if you look around you, it's the same domino-style growth. Take a look at the offers right now for these subscription services, and you'll see that Hulu, Disney, and ESPN for $12.99. That's a pretty good offer when you get standard Netflix for $13. Let's be clear, Netflix has a market cap of $160 billion and Disney is at $185 billion. My prediction is that the Disney online offering for subscriptions becomes as big as Netflix over time. Netflix has 167 million subscribers, and last week Disney reported hitting 50 million for Disney Plus, months into its launch, and it's barely launched in areas like Western Europe. It was originally estimated that Disney Plus would not be profitable for 4 years, but this number was based on reaching 60 to 90 million subscribers by 2024. I think there is a good chance Disney hits that a lot sooner than the original predictions. On top of this, Disney really has no competition in this market. Netflix is catering to such a different audience that Disney will completely dominate the child and family space. My point here is that there is a very real chance that Disney's streaming capabilities grow to a similar level of Netflix, with the added benefit that they also have parks, cable, toys, cruise ship, and movies. Yes, all of these are going to be hit hard for a while, but from my experience, people have short memories and quite typically don't care that much for their safety. Look at the police having to break up parties on the beach. Disney also has massive amounts of IP to be utilized. A whole new era of Marvel and Star Wars gaming on the new consoles coming out late 2020, maybe delayed to 2021, and a ton of new cinematic worlds to build with classic Disney titles. It has got a strong pipeline. The factories are back online to produce the goods for Christmas already. And it isn't all positive, as there will be short-term problems. The main criteria to surviving this COVID-19 downturn is your ability to weather temporary cash shortages. And while Disney has a lot of debt, it is not unmanageable at the moment in respect of their assets. And they have a lot of assets to borrow against or sell in a worst case scenario. By my maths, and I've based it on no theme park or cruise line profits for 2 years, the company could see a dip to 80, but not much lower. Disney's price to earnings is around 16. That's pretty good considering the low interest rates and significantly higher PEs of companies around them. The other thing is that Disney is one of the biggest employers in Florida and California. It is one of the biggest draws for tourism in the US. And if it needs money, it will get it. It's a national icon, and there is no way it is allowed to crumble by the government or the people. It has the same gift as Tesla. It is loved. My prediction is that the moment this quarantine ends and a discount pops up for someone's favorite holiday, we will see floods of people hitting the resorts and parks. My bet is that the effects of coronavirus on companies are not as long-lived as the current consensus, and that once the government and company restrictions are limited, the majority of consumers will rapidly return to normal spending habits. Even if they don't, Disney has already fallen 30% and a lot of the potential loss has been priced in. I expect that governments will end the lockdown by the close of 2020 and people will resume normal holiday habits in 2021 or 2022 latest. I acknowledge that 2020 will be an absolute disaster for the company financially, and the stock might fall further. But give it 2 years and I think we're going to see some good returns. It's a risk, and definitely not a safe play, but for me the potential upside here outweighs the downside.